Now, this is important because we still hold the gold on our balance sheet at a statutory rate of $42 an ounce that it was back in 1971. So at $4,200 an ounce, and assuming we have all the gold we say we do, which I think we probably do, but let's just keep it simple. At $4,200 an ounce on our 8,100 tons of gold, today if we revalued the gold, if Powell, Besant called up Powell and said, okay, revalue it, Treasury would have a windfall free and clear of about $1.2 trillion deposited into their checking account with which they can do whatever he wants within reason. Now, the problem is we have $27 trillion, the Treasury market's $25 trillion in debt, $37 trillion overall. I think the Treasury market is $27 trillion in size. So that's a whole 4% of the Treasury market. It's not big enough. Now, if gold was $20,000 an ounce, that would be about $5 trillion. Gold was $40,000 an ounce. That gets you about $10 trillion. He could literally wade into the Treasury market with that $10 trillion windfall, which is essentially just straight money printing using the gold. We would not have to sell a single ounce of gold to do that. It's just an accounting creation gimmick. And he could buy back, $10 trillion on $27 trillion Treasury market, $25 trillion Treasury market. That's 40% of the market. Now our debt to GDP is not 120%, it's 80%. And oh, by the way, the monetary multiplier of printing that much money and injecting it essentially into the economy, right? Because if you own treasuries, now you got cash. You're going to spend it. GDP would probably grow 20, 30% for 2 or 3 years. Fed would have to cap rates, but the net of it would be after 2-3 years, we would have debt to GDP of probably 25%, 20%. And now the Fed can act independently, manage the monetary system, etc. Now, I think it's really important. Those numbers sound preposterous, but if you look at the market value of U.S. official gold, just the market price times our 8,100 tons, as a percentage of the foreign held portion of U.S. Treasuries outstanding, today, with the massive run we've had in gold, that is at 11%. Now, by way of comparison, in 1989, when the Berlin Wall came down, it was 20%. So gold would have to almost double just to get back to 1989 levels on that metric. The long-term average is around 40%. So gold would have to quadruple from 4,200 an ounce just to get back to the long-term average. And in 1980, when we had an honest-to-goodness dollar crisis, that percentage was 135%. So in 1980, foreigners could have brought all of their foreign debt to the U.S., demanded gold, taken gold, and we still would have had 35% of our gold left over. That is a gold bubble. Our foreign debt was 135% gold back. Today, it's 11. So now, if Besant revalued it unilaterally, he would have to make that market, I think, which is a whole lot of money creation, and that's tricky. But if they're able to pursue policies that let the market value the gold up to those numbers, for 20%, double from here, 4 times from here, and then did it, that's the market. And there are steps we could take, right? Where, there's nobody better at being a bull in a china shop than Trump, right? He can go in there and start breaking stuff and people go, oh God, I need gold. And if everybody bids up gold for him, they could do it. I mean, that is a way to do it fast. Yeah, I started from gold. And once you understand gold, you can get to Bitcoin. So gold is simply stored energy. That's all it is, right? It takes a bunch of energy expended to get gold out of the ground, refine it, process it, melt it, whatever. And that's all gold is. Gold is simply a store of energy in metal form. Gold isn't used for anything. People say, well, gold's not used for anything. Exactly. All it serves is a storage of energy over time as a currency unit moves around it. I've seen that argument made, and I think there's some validity to it. And that's, gold has a small usage for that, but there's other things you can use gold for. And certainly, you can use other metals rather than gold for most of those applications. What gold's main usage is for preserving purchasing power. It is for devaluing sovereign debt or recapitalizing sovereign balance sheets after they get too much debt. And it does that because it is essentially somebody expended a whole bunch of energy to get that gold out of the ground, and here it sits. And if the price of gold gets too cheap, no one's going to expend the energy because they can't make money doing it. And so mining comes down. So gold is a store of energy. Bitcoin is a store of energy as well. It's digital though. And the reason it is similar is because there's only, number one, Bitcoin is harder than gold, right? So when the price of gold goes up, more supply is going to come online, right? Because gold miners are going to be incented to get more. And the price and gold's supply goes up, I don't know, 1% a year anyway. But it'll go up faster as the price goes up. If gold was $1 million an ounce, you'd have people out there, going out into the ocean and literally pulling the tiny bits out of the out of the ocean that sit there. But Bitcoin has a hard cap. There's only 21 million that are ever going to be mined, and that is coded into it. And that's above my pay grade for why that is. But I interact in that world, and it has been, very, very, very bright coders, et cetera. They're all saying the same thing. It's a hard cap at 21 million. Now, what a lot of people denigrate Bitcoin about, which is look how much energy it uses. That's actually, that's not a flaw. That's the feature. That is the equivalent of, basically Bitcoin's, when I say gold is a store of energy, Bitcoin is a store of energy. If you look at the price of Bitcoin over time, the amount of, the value of Bitcoin is supported by the amount of electricity it takes to create a Bitcoin. And that is essentially very similar to the amount of energy it takes to mine an ounce of gold. And the difference of Bitcoin is, number one, there is never going to be more than 21 million. Number two, the pace of mining does not change. So when Bitcoin goes from 50 to 100,000 like it did last year, it's not like the Bitcoin miners all of a sudden start mining way more gold or Bitcoin, as fast as they can. The amount of mining continues to be regulated relative to the amount of mining put to the system to mine Bitcoin. And I won't get more complicated than that, but it's basically algorithmically limited based on the amount of resources being allocated to mining Bitcoin.
There's really, in some ways, nothing to stop that, except this is what I think it's going to look like. Let's say that they decide to confiscate, do an overt confiscation, because they've been doing covert, but an overt confiscation when spot is at $10,000 an ounce, right? Well, where do most people in the U.S. anyway hold their gold? In IRAs, right?
Retirement account, yeah.
Retirement accounts. So what they would do is they would say, okay, look, it's your patriotic duty and we really need the gold to remain in power, blah, blah, blah. And we'll pay you $12,000 for that gold. Well, most people believe the lies of Wall Street, and those spot contracts would go, well, wow, gold is only worth 10,000 and look at how great they are. They're willing to pay me 12.
Right. Yeah.
But that person that paid $12 million for that coin, are they turning it in for 12,000? No, they're not. That's the importance of being in that category. And again, anybody that can pay $12 million rather for 1 ounce of gold is likely to be like Treasury Secretary Wooden, who writes the laws, or who wrote the law anyway, or somebody that could influence that Treasury Secretary to write the law in their favor. When we're talking about fundamental value, we're taking a look at the level of debt versus the level of gold, and that's how we determine it. But it's extraordinarily conservative, because what that does not take into account are all the levels of leverage that are on top of that debt, plus all of the new debt that they will create in the future. So if we determine what the fundamental value is the day that you call in and set up what you need to understand that's a very conservative position. We don't know how much more debt they're going to accumulate, but the reality is desperate governments do desperate things, and that's the only tool they have, is more money printing. So to be very conservative with it, that's how we determine the fundamental value. By the time you're going to execute it, what might take 10 ounces today might take an ounce at that time because of how much, in terms of, in this country, dollars, but this is true anywhere in the world, how much more debt they've grown.
Yeah.
Because, I do it globally because this is a global issue, so we need to know globally.
Yeah.
But I did it recently also just for the U.S., and instead of it being around 38,000 to 40,000, whatever that number was, it was something like $135,000.
Yeah.
So if you're doing the calculation based on $38,000, but the true fundamental value in your country is 135, you're very, very covered in any outcome, because that's what we try and do. What if I'm right? What if I'm wrong?